Hello, everyone. Today we're going to be talking about Decision 2020. Are you financially ready for the upcoming elections? And the reason we wanted to have this webinar at Confidence Wealth, we're always looking for the things that could have an impact on your financial situation, on your financial future. And there are a lot of events out there that are probably inconsequential, but once in a while, there are some things that are going on out there that could have a direct impact on you. And there are sometimes unpredictable two paths that could lead either to good or not so good. And if anything is good, it's okay, it works out very well. But the thing we're trying to cover against is any potential adverse conditions or situations that could be detrimental to you financially and as far as your assets and portfolio, and just as importantly, your net worth. So they say hindsight is 2020. And everybody could figure out everything after it happens. This presidential election is no different. There are a lot of predictions out there. This person thinks this person is going to win. That person is going to win. And at the end of the day, I can guarantee you, I know who's going to win. It's going to be one of them. One way or the other, it's going to be either Donald Trump or Joe Biden. That's the extent of what we know. We've all seen surprises and things happen, such as the surprise election of Donald Trump in 2016. And I wouldn't discount anything this year. Anything can happen and could go either way. So, having said that, the question starts to be, what is the impact that either of those could have in your portfolio, and what should you do? Is there some things you can do to prepare for this? And no doubt, you've been looking at your TV, and you're looking at your smartphone, you're looking at the news, and you're actually bewildered of the amount of confusion that's out there as far as where everything is going, who does what, who wants what, and what the impact could be on you. And waking up every day, trying to figure where all this could go, could be a daunting task. And then you go and start listening to the talking head on news channels, whether it's CNBC, Fox Business, or any other channel out there that provides you with business and financial information. So deciphering all that could be a very, very hard task. And I get it. In every election, you get the same cliche. This is the most important consequential election that we've ever had. But we all know truly 2020 is different. We've never seen our society so polarized. We've never seen the economic agenda so different and contrasted. And we've never had situations like a pandemic while all this is going on. And then we have riots, and we've got all sorts of problems out there, globally and nationally, that are affecting everything that we're doing in here. So it is important that we examine some of those issues and see how it's going to fall. And also, it is important that we come up with decisions of what to do if this or that happens, and what can you do now to make sure that you're protected to a degree. And there are a number of issues that could impact everything you're doing as far as your net worth, which I usually focus on. And there's a tendency to focus on your investments in the markets, which I understand is important. There's a tendency to focus on your other assets, and I think that's very, very important too, just as important. But I do believe net worth is what I like to focus on. I'm going to tell you why. Because your net worth is a function of your assets minus your liabilities. And you can have all sorts of assets out there, but if you don't consider your liabilities, you don't consider the overall picture of where your net worth is going, it's not going to be as clear of a picture. In addition to that, I do believe your net worth will dictate where you're going to be in the future. So let's look at some of the issues that are involved in this. And I'm just going to sort of throw them out there so we know there's a lot of them out there. One of them is technology. Another one is trade. Infrastructure issues in this country in terms of our bridges, our highways, freeways, you name it, including our technological infrastructure. Social media and all the issues associated with that as far as whether they're regulated companies, unregulated companies, where we're going to go from here with that. China, Europe, and when I say Europe, you talk about the European Union and their policies. I mean, there's a saying, somewhere along the lines of the United States creates and the European Union regulates. And those regulations, in fact, a large segment of the consumer market, and we want to see where that's going to go with the upcoming elections and how things are going to change. Because each candidate has some kind of a stance and posture towards these things. Then you get to issues like immigration, the wall, the fight over the wall. Whichever side you're on, it doesn't matter. Then there is the issue of eruption of violence across the board. So there is a new tendency to solve our problems through violence. And again, I'm not pointing any side. There is destruction of property, and I mean business property, that is a new thing to us here. And what I mean by that, on the scale that is happening right now, or has happened, that is all on the line. If one side wins, the other side says that's not legitimate, we're going to have another problem. While these things are general political issues, what we're talking about here is that how is this going to impact your future net worth and the results you're getting? Because again, it's contrasted drastically, even from a taxation standpoint. And you might say, well, taxation probably won't affect. Well, it does affect. Everything we do affects your financial situation and your net worth. And then we get to the question, how would this election affect your retirement? So for me, I separate net worth from retirement. I consider them, retirement is a subset of your overall net worth. So I look at that, and then I parse down your retirement. And then I use strategies to increase your net worth to make sure that it's increased. And of course, I don't want to get into that, but there are a number of things you could do to that, to change it, increase it, grow it in a significant way. But again, anything that happens in that election will determine which path you should be taking. And why we are here today is to take some actionable, concrete items that we could use to help you navigate through that. And when I say navigate, I don't mean we're going to give solutions that's going to guarantee anything, but more along the lines of steps you might be able to take to get you safely to the next stage in this election cycle. So we're going to take more of the 30,000-foot view on what's going on out there, and we're going to proceed from there. And one of the things we've been doing with our clients is that we've been looking at their financial plan, and we've been organizing it in a way that is helpful in the next presidential cycle. And that does not mean we're going to be in the business predicting what's going to happen exactly, but there are a number of steps we can take to reduce the risk on their portfolio and their net worth. And that is the key thing you got to focus on. It's risk reduction is what we're looking at here when we're talking about, so that you won't fall in a situation that you may not like a year from now, or 2 years from now, 3 years from now. And that's what we're talking about at the end of the day. If you go back to your decisions, you're going to always trace them back to something you've done in the past. And that past could be anywhere from one day, or it could be as far as 10 years. And I'm here to tell you that some of the decisions we're going to make today are going to have impact on years and years to come, depending on where you stand. You also need to remember one more thing. Your situation could not be the same as the other person, no matter how close you are, how close you look. I know a lot of people think, okay, yeah, it's everybody's doing it that way, it's going to be okay. But I think what killed a lot of financial plans is everybody's doing it that way. That term is horrible as far as I'm concerned, because it's more of a herd mentality. And we all know winning does not go with herd mentality. It goes with almost a contrarian kind of view, almost a sort of a way of looking at things that is objective without looking at everybody does. Because the herd is wrong, by the way. The herd usually is going the wrong direction. We all know that. We know all the winners in the industry and all the winners in the financial markets have made headways because they were not going with the herd. Don't get me wrong. There are times we need to go with the herd, for sure. And these are times when you strategically look at them and go, that's going in the right direction. But there's a right time and a right place to do these things. And a properly structured plan that takes into account certain kind of the advanced solutions that you ought to think about comes into play. And I'll tell you, in every presidential election I've been through, clients come to me and say things like, I think this person is going to win, or I think this is going to happen, or I think that's going to happen. I'm going to take that approach. I remember that happened when it was George Bush Sr. I remember when Clinton. I remember during Clinton's second term. I remember it during George Bush Jr. And on and on and on. Every presidential cycle, people have predictions and they do things, or take bets, or do nothing sometimes. And again, none of these are necessarily, you could end up wrong, because you could end up right. But as far as I'm concerned, to me, it's like rolling the dice, and that's what I tell clients. I tell them all the time, look, you could do it that way and you could be right, but you also could be wrong. Like I said earlier, one of the two candidates is going to get elected. One of the two candidates is going to do one thing or the other. You don't know what it is. And we know politicians, they just say things sometimes. And that's not new. That's been as old as elections and politicians existed ever. They will say one thing and do something else at the end of the day. Very rarely going to get something done exactly as they said they would. Then let me throw you the biggest monkey wrench in this whole economic puzzle that we have in front of us right now, the pandemic. Now, I'm going to tell you something about that. That's not the norm. So the normal is the pandemic is here. Things are either going to go away and things are going to get better, or things are going to go away and things are going to be bad. Well, the truth of the matter is no one really knows exactly how it's going to go down. I mean, the pandemic could last a little bit longer. It could be gone. Either way, I will tell you, there is going to be a mess in the wake of that pandemic. I'm going to tell you where that mess is. That mess is that all the businesses that has failed, all the people that went out of business, all the people that had problems, putting the workforce back. You've got cities that their economy got decimated with that environment. Let me give you an example. During 9/11, it took 10 years for the city of Los Angeles to recover based on the lack of tourism that occurred for that 1 year or 2 years or whatever happened then. So if a simple, what I call almost like a baby event in comparison to COVID economically, which was what 9/11 was, a small event. Now, back then was a massive event on the economy. And it really did a lot of damage. But I propose to you that COVID-19 as a pandemic had created more of a havoc on the economy. If it took that long to recover, how long would it take for cities and municipalities and the country to recover from what has happened here with COVID, with the shutdowns, riots, all these things? Obviously, we need some sound fiscal policy to get us out of it quicker. But you need to believe that there will be ramifications over the next several years from that. And we need sound fiscal policy, we need sound leadership to make sure that these things go. But in the meantime, you can't count on that. If you start counting on getting the right people before they even show up or before they do things, I think you might be very disappointed. So you look at your net worth, you look at your portfolio, and you've spent years building it. You spend years working on it. You spend all that time trying to figure out what to do with respect to this part of it or that part of it. You get advice. And at the end of the day, for some reason, because somebody did not do what they're supposed to do, you end up with the short end of the stick, in my opinion. Is that what you want? Of course not. Nobody wants that. But I think the mother of all problems is the lack of preparation, is letting things go. So one of the key things that we've been doing, of course, I will let you know that, is that we have been looking objectively at the plans and making sure that they withstand certain pressures, certain economic situations that could impact them and that could reduce your net worth. The first key to that is to assess your risk. And these are strategies you can look at and implement actually. So let's talk about your risk. If your risk is spread the wrong way, you will be subject to what comes next. The problem is risk is subjective. And in many cases we find out there is that lots of times people have designed a plan. The person that did it for them had a very basic understanding of what risk is and designed it that way. A lot of plans are based on assumptions that the markets will always recover, therefore you always make up what you lost. And I can tell you what the flaw in that strategy is, or that thinking. The flaw is this particular strategy assumes two things. One, that the markets will always go up, which is not true. You can argue that it could be true, always will go up, but market could be flat for a while or down. The second thing you got to assume is that you have infinite lifetime, infinite life cycle. And if that's the case, then yes, it's a possibility. Of course, the markets will recover at some point. Of course, they'll do well. But in a certain life cycle that you're in, if that economy and that market did not recover, you're going to find you're going to have a lot of problems. And over the years, over my almost 29 years of doing this, I've seen it over and over again. It never fails. Somebody always comes in and says, well, I was told that, and that was the advice I've given, and I thought it was good, it looked good, I always thought the market's going to be up, and here I am. Well, did you plan this? Did you do this? Did you use that advanced strategy? Or did you use this particular configuration? No. Why not? Because I thought it was okay. Why? Because it's always comfortable to do the same thing over and over again. I always look for advice. I'm always looking for new advice. I'm always reaching and searching to find the next thing that could give me a distinction and idea of what to do. Sure, I can make decisions. Lots of times I say yes, sometimes I say no. But ultimately, without that advice, I'm unable to create a functioning, thriving company that's got good positioning for the clients and helpful to the clients that we help here. So let's go back to some detailed information here. Let's talk about the volatility index. Since 2000, the average daily volatility in non-election year ranges anywhere from 19 to 56. In election year, it ranges from 23 to 82. Now let's talk about what happened this year. On March 9th, the Dow sustained the largest point drop to date. On March 12th and March 16th, the market experienced another record-breaking drops. In fact, on March 13th, the Dow had a 13% drop, which is one of the biggest drops in history ever. Not to mention the S&P 500, which dropped almost 30% in just 22 days. To many people, they feel that the rise of the market will solve everything for their portfolios. But that is not true. There are a lot of sector rotations that occur when markets pick up. And when that happens, the impact on your portfolio may not necessarily be correlated to the market increase. That is one of the reasons why lots of times when the markets rise, you see a lot of people left in the dust or left behind. It's because all those rotations that occurred didn't help them. Without proper planning and advanced strategies or strategies that could help you to protect against those events, you're going to be a sitting duck for anything that could happen out there. And if you have any questions on that, of course, you can always ask. Now, I know many of you think that the market will go one way or the other depending on who wins. And we all know, of course, the number to win from an electoral college is 270 and above. Whoever gets 270 is going to win. There's not going to be any harm in examining the previous presidential trends here. Stock market returns vary in presidential elections without any reasoning. Sometimes something that makes sense doesn't happen, and sometimes something that doesn't make sense happens after a presidential election. We saw a 16% jump in the market after Barack Obama got elected in 2012. But we saw a 37% drop when Barack Obama won in 2008. What I'm getting at here is that there are many factors could affect the market, but the election is only one of them. So whatever happens here, if your portfolio is 7.5 million, you're looking at almost 2.2 million in losses. And these kind of losses could happen very quickly in this day and age. Granted, again, things could go up, but the volatility and up and down could cause many other consequences to your overall results. And that's what you need to look at. Because ultimately, if you look at what we're trying to do here, is keep you on track on a way where you're level. The point is that you can go up and down a little bit, which without too much volatility. But what you want to avoid is the key increase in volatility where things are massively gyrating up and down. If you want to know the key to losses, that's significant volatility. And I'm not going to say every single time there's volatility you're going to have losses, but there will be times when it will be the case. And the question is, are you going to be the one when the music stops and you don't have a chair? You don't want that. And the only way to do that is making sure that your plan is done correctly. So solution number one, evaluate your plan. Make sure it is taking into account risk and reward. Let's just take the $750,000 portfolio and you lost 30% of your portfolio, which is $225,000. You technically lost 5.6 years of income. And if you have to withdraw money during that period, let's say it would take 5 to 10 years, let's say for the market to pick up where it was, if it does that, you are going to be withdrawing money against a declining portfolio. And that is disastrous. And that's where the problems start. And we can give you examples of that. So back in March, when the Dow dropped by about 13% and the S&P dropped by almost 30% in the weeks that followed, we were on the phone with our clients, talking to them. And to be clear, we weren't on the phone with them because we were panicked. It was actually the other way around. We were on the phone to assure them that their retirement is sound. We reminded them of the plans we put in earlier because what we build in here are plans that are designed to mitigate the risk of markets like that. And there are ways to do this. There are a number of advanced strategies that we deploy to get that done. And quite frankly, these are some of the best conversations we've had with people. I mean, I like that conversation when I call one of our clients and say to them, by the way, you're okay. And by the way, our clients do know that. That's why we don't get that many calls. And sometimes we're proactive in calling. However, we get that occasional call. Am I okay? And the answer is, remember that plan we put? And they say, yes. I say, that kept you from a disaster. So if you're in that situation where you think you've got risk in your portfolio, this is the time to assess what's going to happen next. This is the time to understand your risk. This is the time to go and try and implement strategies that could help you. Now, every firm specializes in different kind of strategies and ways of doing things. Obviously, we're no different. We are experts in certain areas, and there are certain strategies that are beyond the average advisor. So if you feel you need to assess your risk, feel free to connect, by the way. The last thing I want to see is a reduction in retirement. The last thing I want to see is a reduction in net worth. It is not uncommon for us to meet with people that are way before retirement and ready to do something about it, make sure that they are on the right track. And it's not uncommon for us to meet people during retirement that want to also protect themselves. There's no one size fits all. Everybody's got a different circumstance, different situation, and looking at it from with an objective eye is key to this. You don't want to fall for the typical broker metaphor of let's stay the course, ride it out. Because I can tell you in my years of doing this, I've seen so many people's retirement get devastated by that philosophy. Of course, that philosophy has some sort of a place for it, but it has to be done correctly. And if you do it incorrectly, is where the problems are. By the way, if you drive correctly, you're not going to get into an accident. If you take a casual attitude towards driving, you're going to get into an accident. Now, you may not get an accident today, tomorrow, the day after, but at some point you might get into an accident. And the might is the problem. Remember, there's never been a time when we have so many different forces affecting the economy at the same time. From social unrest, to pandemic, to destruction of businesses, to a presidential election that's completely out of control, and a variety of other things. International markets, China, Russia, you name it. There are a lot of things that are going on out there that could ultimately have impact on everything we're doing in here. So what we're doing here is offering everybody on this webinar a complimentary risk analysis. In this analysis, we're going to give you not only what the situation is, where your intersection in your portfolio is, where things are at right now, but we'll also highlight to you the advanced strategies or some of the strategies you need that will help you increase your net worth and protect yourself. So it's a twofold approach. The first thing we're trying to do is minimize the risk. The second thing we're going to try and do is increase your net worth. And that's, to us, the name of the game. That's our specialty in here. And you want to take advantage of it. And some of you might go, what is a risk analysis? It sounds like something NASA would do. Or I've done that and I've got a 200-page of something that I never understood. That's because you've been seeing a sort of automated way to look at your risk without real assessments of where things need to be. And that's the human factor combined with technology is what we've done over the years. A risk analysis is a simple review of your entire financial picture to see where you might fall. What we do actually, and I want to give you a different term that we use for it in here at Confidence Wealth, is we call it stress testing. So engineers stress test the structure. And your net worth and your financial picture is a structure that needs to be tested. You poke at it in a specific way to understand where it could break. And when we find out where it will break is when we'll let you know and you can make some decisions as to where to go. I mean, they say knowledge is power, but knowledge alone, just knowing something, is not necessarily as important as knowing something and knowing the impact of how it would affect you. That's so that you could make some decisions. And with so many of you nowadays feeling uncertain, this is definitely the time for you to get an assessment that could help you. And we're trying to spread the word out. I mean, I've done this for years and we've been talking to many people, and sometimes people understand the impact of what we're doing here in terms of stress testing and analysis and making sure things are moving in the right direction for the client. And sometimes they don't. And sometimes when bad things happen, people come back and say, God, now I understand what you're saying. But I'd rather not see that. I'd rather see us go on the right track from the beginning, from the get-go. And that's why we're going out there trying to spread the word. There are three things that could affect the future in terms of whichever candidate wins: their capability, their credibility, and the economy. Both candidates are credible within their own party and have very loyal following. As far as capability, there's a perception on one side that a businessman can actually run the economy better, and the other side that a politician with 45 years experience can run it better. And as far as the economy, both of them are running it obviously two opposite platforms. The president is running on an economic boom platform, and Joe Biden is running on a gloomy economic picture based on what President Trump is doing. So far, the polls have been uncertain, and no one really knows where this is going to go. One of the biggest problems you're going to see in the coming future, and we're working to resolve for our clients and help them with their portfolios and net worth, is that the issue of deficit and taxes. So you got to understand the impact of that on the future. So right now, we're trillions and trillions of dollars in deficit. The federal deficit. Somebody's got to pay that back. And I can assure you, it's not going to be anybody else other than you and your grandchildren. But also that has impact on your overall results and your portfolio. The reason for that is that the economic engine must be able to produce in a way that's going to create more revenues for that shortfall to be back. I'm going to give you an example. If you have a credit card bill and the credit card bill goes up and up and up, at some point it will be unsustainable. That's what's happening with us right now. And the coronavirus and all the things that happened recently are a contributor to even a further and a bigger deficit right now. And then the revenues that need to come in, even with a good economy, is going to have to make up for the lost time that we had when the COVID-19 actually hit. So the government at some point either has to generate more revenues or it's got to increase taxes. Whether you think one or the other will happen, the thing you could do as a strategy is to position yourself in areas where you can lower your tax rate. One of the best ways to do that is going to what's called a Roth IRA versus a standard IRA. That's one strategy. But there are others out there, of course, you could use to lower your tax burden and create tax-free income for yourself. Of course, some of them are very advanced strategies or advanced enough that the average advisor is not aware of or not familiar with, or if they're aware of, they're not able to execute them because they just simply don't have the know-how. They have not been trained on them in a proper way. So that is a solution for you, one of the ideas for you. But if you're looking for a bigger chunk to take more tax-free income, then certainly you can talk to us about that one. So here, again, if you need help with that, we can give you the second action you can do is that talk to us if we can help you convert some of those assets into a Roth IRA. And the conversion has to be done in an appropriate way, in a correct way. Otherwise, you would end up with some tax consequences. So you want to have people that know how to do it correctly. So I encourage you to do it if you can. But if you have trouble with that, or if you're not sure, talk to us so we can figure it out for you. Okay, so a few more thoughts about the election. I'm sure many of you are going to go vote out there. But we know the turnout may not be as strong as the normal. That's because of COVID-19. So enter the mail-in ballot. So a lot of states are doing that. They're putting a system to allow people to have mail-in ballot. You talk to one side, they'll say to you, it's a cause for fraud. The other side says, no, it won't be a cause for fraud. If there's a fraud or no fraud, whatever the case might be, ultimately for our purpose in this conversation, it could be a contentious election. And here is what's on my mind. If there is a disputed election between the two sides, and each side is saying the other side didn't win, well, now what? Do we go through months of court proceedings? Do people start fighting with each other? Do you get a situation where people start drawing their guns and fighting with each other? We don't know. I'm not trying to create any scenario that's gloom and doom, but there are all possibilities that we can have problems in here. Again, that impacts the financial markets, impacts the decisions companies take, impacts how your portfolios are, impacts your net worth, impacts your taxes. What if one side wins and the other side says you won because you had that many people on the Supreme Court that are with you, and that's why you won, and therefore you didn't win fair and square? Again, you could look at any kind of scenario you want to look at. These are all things that could happen. So how do you protect yourself from all these things? Proper planning. Get a portfolio review that helps you understand how to lower your risk from all these things, because there are ways to do that, believe it or not. It is not just about a plan. It's about a very specific, well-crafted, well-thought-out plan. Remember, ultimately, it's about your net worth and your retirement. I cannot emphasize this hard enough. Remember, your retirement, you only have one shot at doing it right by the end of it. Meaning that if you end your retirement well, you've done it. If you made a mistake, you can't go do a redo on this one. Mistakes in retirement and your net worth could be very dangerous and very fatal to your financial situation. And it's the worst part about it is that you could never know what's going to happen until it ends. So you see it and go, oh my God, that was good, or that was not so good. And what we want to do is make sure that you don't go into that. I want to make sure that this is the time now to look at things and make sure they're right. And your retirement and your financial retirement plan doesn't even just hinge on just the financial side of it. There are a number of other issues that could be important. The other thing we do is look at your health planning and help you with that. It is important that you make a plan for that. What's going to happen if you slip and fall while you are retired, when your family is away, if your spouse can't take care of you? There are a number of solutions for that. What do you do in terms of preventative medicine, perhaps? What can you do financially to cover for any problems? There are a number of solutions that most people don't even think about, and a lot of advisors don't think about, a lot of brokers don't think about. And what you want to do is get away from that and try and figure it out, because when it happens, usually it's a little bit too late to do anything about it. The last one I would say to you is make sure that your retirement plan and your net worth plan is written, because if that's which is written is successful. And many people know when you write something down, you go back to it a year later, you're going to find that it actually works. And you're going to find a list of things you've wrote 1 year before. If you look at them lots of times, you see you probably accomplished 50 to 60% of them at the least. I can tell you I've seen that happen. Now, this is no guarantee, but typically what you write and what you set up in a correct way and you can look at and observe usually comes to fruition. So in closing today, we covered a lot of ground, we covered a lot of concepts, but I would say to you, it can be all narrowed down into a simple way of approaching things, because the most complex things can be approached from a simple perspective. And that is assessing your risk by the right firm. If you have a broker, that's okay. If you'd like us to help you stress test your portfolio, we'll do that for you. Not a problem. If that information here was helpful to you, that's good too. The objective here is to give you a little bit of a way to think about this that you may not have thought about, or we might have sparked something that you weren't really thinking about, and hopefully that was helpful to you. If you decide you need some help, we'll do a complimentary consultation. It's a discovery meeting that we'll have with you. From the discovery meeting, we'll take all the information, we'll understand you more, and then we will take that information and create an analysis, in-depth analysis, and that analysis takes hours in our case. And then we give you the report as to what has happened. And again, there's no cost to you. If there's anything or any solution that could be useful to you, we will let you know what it is and you can make some decisions. In our case, we're in the business of helping people. It's the first thing we look at. Then, if there's anything we can help you with in terms of business, we'll look at it together. We want people that want to be helped in our model. And if you need it, we're here for you. Thank you for attending. I look forward to seeing you.